Hey guys, hope you guys had a good week trading this week. Quite the wild week we had, huh? So let's take a look at where we're at and we'll kind of talk about stuff. So if you guys haven't been a part of the weekly video, this one's going to be a little longer, a little more detailed. So let's just get into it here. So the first thing I want to compare, you can see my arrows I have here. So let's take a flashback back to June. So back in June, we have right here, June 8th. The top of this day was 415.82. So this was 2 days before June CPI, which June CPI hit right here. You can see this big old sell-off we had. And then June CPI was on a Friday, so it's a little bit of a different trend because most CPIs are released on a Wednesday, but this one was on a Friday. So anyways, and then right here we have FOMOC. And then 2 days after FOMOC, we put the bottom in. Now, the other interesting thing about this trend, if you compare it to where we're at, which we'll get more to deal about where we're at right now, is that this top to bottom was a 13% drop over, this is quite a few days, because again, the amount of days is going to be different because of the fact that CPI is on a Friday, but we're focusing on the 13%. So we had a 13% drop. That put the low of a year in. So that also, interesting enough, was in the gray channel, and then we broke into the red channel, and then we bounced. So let's look at where we're at now. So over here, this is a day before CPI. I have 2 days here, but I meant to put a day. A day before CPI. This was CPI. We have a sell-off, consolidation, FOMOC. Now we have 2 days. So this from top to bottom right here is a 12% drop, so only a 1% difference. It put us into the red channel. We didn't quite hit 362.17, but we hit 363.29. We put a huge hanging man in here. So my theory is, and we left a big old gap up here. My theory is that Monday we are about to see a big old bounce. We probably actually honestly could open over 370.7. So what I'm thinking is that we just put the June drop in, and now we're going to see this bounce right here. I think we could really honestly test somewhere between 380 to 390 this week, and then we're going to see a small drop, and then we're going to rock it. So the other thing to keep in mind, and I mentioned this yesterday in the video, I had to be brief because I have to keep those other videos under 10 minutes just for cross-posting, but the quarterly was on June 30th, which was right here. This whole area right here was consolidation. We had the quarterly roll off, and then we moved up. I have a theory, and I mentioned this last night, that we're going to bounce. Quarterly is next Friday. So there's a chance that we could see a small bounce up here, and we're going to consolidate here. I think we might even come back down and really actually test this 362 support down here, but then we're going to go up. I don't think we're going to break down much lower right now. I think later there's a chance for it, but I have a feeling we're going to bounce, and then we might move back up, and we might even retake like 400s to 410s by the end of October into November. So we broke the blue channel yesterday, so that is no longer a support, and I'm not even going to try to put it into a new support with this resistance. We will just use this as a resistance line once we ever eventually get to it. So the only really channel we have right now is this black bear channel, which is obviously extremely aggressive, and we're not gonna keep this type of sell-off going. Something else I wanted to mention, and I tried to mention in the actual written TA, but it's a little hard to like describe it, but I can visually show it to you guys, is most of this sell-off has been a catalyst event. So let's go back to here. So we had a pretty major resistance. We knew this was going to be big resistance because this was the bear channel. So we hit this and then we dropped. But the drop wasn't that dramatic. I believe we had a catalyst right here. I can't remember back. I'd have to look to see what the 19th to the 22nd catalyst was, because that was obviously we closed at 422 and we opened at 417. There had to have been something there. I can't remember what it was though. And then we had a move down, And then this was Jackson Hole. So here we were bouncing back up, as you can see. But then Jackson Hole came in, and that was a huge sell-off. So then we had some nice sell-offs, and not really impressive days, though. But all the movement is happening overnight. So futures is selling off. We're opening down like 1%, 0.75%, 1.5% like today. And then we're not really doing a lot overnight, or during the day, I mean. We're just hitting like we saw today. I mean, yeah, we had a huge move down, but then we really just, for most of the day, we didn't do a whole lot of anything. We just kind of tread down. I mean, we started making some progress down here, but even like look at yesterday. We had a red day, and then we just kind of did nothing. You know, there's not a lot of movement happening on these intradays. So then we have a drop, and then we started our rally. So obviously this was a dead cat bounce per definition, but then we hit CPI. So the thing about this is, think about it. If CPI would have been a beat, we would be, instead of being down here, we would be up here. And then, so now, okay, well, now we're scared about the basic point hike, so we have a sell-off. Then we start bouncing, and we're okay now. But nope, then FOMO comes in, and now we have a big sell-off. So today is really the first day, I would say, in this whole huge sell-off that was a natural sell-off. And what I mean by that is that like we didn't have anything really this morning, although Jay Powell was technically speaking today, but he was just doing an introduction, and it was really a whole bunch of nothing, which obviously that's what we expected. But today was really the first day that markets opened super red and just stayed red. I mean, the sell pressure at one point hit negative 250, which for you guys that don't watch sell pressure, about a negative 5 to negative 10 is a big deal on most days. So to hit negative 250 is crazy. But if you think about it, we had this crazy sell pressure, but what did we do? We V-bottom rallied. So obviously this was shorts covering probably. So that's something to keep in mind too. These people that are super short on the market, they're taking profits. So it's not like back here where people were super short and then they weren't taking profits. Like we had this was a crazy time in the market, but I mean, we just steadily dropped. Same back here, we just kept dropping and then we rallied. Like same right here, we just dropped. So the thing to keep in mind is that this sell-off is only catalyst driven. And that's what I was talking about up in here. I said that the markets need a reason to sell off. So what is our current reason to sell off? Well, there was some overnight European stuff going on with the banks and all that stuff. So I guess that technically could be today's reason for selling off. I saw CNBC talking about that. So if we can get, let's even say that today, that's why we sold off was because of the banks in Europe and all the other stuff happening. So we don't have a reason to keep selling off. So what's going to happen? We're gonna start chopping, consolidating, or even going up. So looking forward at the calendar, what do we have looking forward? Nothing really. We have GDP coming in on, I think it's Friday maybe. Let's look. I can look at my calendar real quick here. Let's look. Next week, GDP. GDP on Thursday. And it's expected to be, I was told it was going to be positive, but this is saying it's expected to be negative. So I'm unsure about that. Oh, this is the revision for quarter 2. Okay. When CNBC was talking about it, they were saying it was going to be the quarter 3 GDP, but I guess that's not till later in the year. So never mind about GDP. So GDP isn't going to be a thing. We have PCE on Friday, and that's pretty much it. We don't really have any big catalysts until CPI in middle of October. I think it's the 13th. So what's going to be the reason that we keep selling off? I mean, this wasn't capitulation. Yeah, we hit a big level down here, and yeah, we had some pretty crazy selling off. I mean, just looking from here to here, this is some big selling. Let's see, I wrote down somewhere how much selling we've had. Let's see if I... But anyways, so my point is that I'm rambling here. Sorry, I'll get to the point. We need a reason to keep selling off. What is that reason? I don't think we have a reason. Markets naturally want to go up. And seeing negative 250 sell pressure today, and the fact that we were still able to rally almost $5 at the end of the day, that's a big deal. most of the moves is coming overnight. So if we don't have a negative catalyst, I think we're going to just see some moves up. I think we're going to see some consolidation. So what I'm looking for next week is a test of probably 382 to 390. I think we're going to get there. There's a chance that Monday and Tuesday will be green, nice dead cat bounce up here, and then we'll come back down and maybe retest 370 support on like Friday. And then once that quarterly rolls, because JPM's collar, I have it highlighted on my chart right here, is at 258-ish for SPY. And 300-ish for SPY. It's 3,035.80 on SPYX technically. So once they roll these, if they roll them higher, they're going to rally us. That's going to cause a nice big rally. So it'll be interesting to see where we go. So let's look at the weekly and kind of see where we're at here. So this orange dotted channel or dotted support right here is actually really impressive that we broke through this. So this actually goes back to 2020 COVID. You can see where we had this nice recovery here. So we haven't broken that support in 2 years now. It started on September 21st. So exactly 2 years, almost. June support bounced right there, but now we busted through that. So let's go ahead and get rid of that. We broke through this weekly block channel right here. We'll leave the resistance up just for visual. Let me get rid of this purple stuff here. So what do you see? We broke below the 200 EMA on the weekly here, which I told you guys was a big, big level that I will not be bearish until we close below that. But we bounced, and they bounced us, and what do? They closed us over the weekly 200 EMA. Just like back here, we bounced on this. I remember vividly back in June. I remember looking, and I was like, wow, we broke the 200 EMA. We are about to see the biggest red I've ever seen. It's going to be a negative 20% week. And we opened killer green. We opened like 1.3% green the next day, on Monday. We are seeing the exact same setup. We broke into the 360s. We bounced off 362, 363 this time. We closed over the 200 EMA after breaking down on a Friday. I think we're going to open big green on Monday, and I think we're going to see a similar push up. We could even close the week near 390, definitely maybe over 380. So that's what I'm looking for next week. This is our current downward channel to the best that we can guess based on the support from the August one and the 6th September one from this week. So that gives us a support right here at 365.8, followed by, this is the collar at 358.6, and then actual channel support will be down here at 354.5. Resistance is going to be right here at 380, and then it's going to be up here at 385.4. So let's take a look at futures. Same thing. You can see we're kind of actually in a falling wedge if you use this resistance. If we pull over this support line from this drop and then today also, you can see we even have even a more impressive falling wedge right here. So with this falling wedge and bouncing down here and going up, we're going to look for support next week at 36.71. Again, you can see that even back here in June, we never closed a candle below 36.70. So it's hard to be full on bear to think that we're going to the 3500s, 3400s until we close a candle below that. We close a candle next week below 36.70, then I'll be really bearish. We're going to look for a bounce up here. We're going to look for Monday to break through 37.57. That'll break this resistance line, and then we can look for a test on Tuesday right here of maybe 38.60 and try to break this resistance line. So looking at futures weekly, same thing. We broke our black bear channel. Oops. We broke our black bear channel. I didn't have this support in here from 2020, but I'm sure we broke that. So now we have our blue bear channel right here. Same thing. We didn't actually touch the 200 EMA back here in June when we bounced though. Obviously, same thing kind of up here though. We didn't quite hit the bear channel in August when we put the top in. But we bounced directly off the 200 EMA. We did break through it for a little bit, and then we closed well over it. We even closed over 3,700, which is important to hold that support. So next week we're going to look for support 36.76, and then that's going to give us the blue support down here at 35.88. We break through that, we could see a face drop down to the 3400s. Key resistance is first going to be right here at 38.25, and then we're going to be looking at 3900 again. I still, like I said, I like a bounce next week. I think futures puts in a similar double bottom candle, and then we're going to bounce, and we're going to chop, and then we're going to see a move up. That is my anticipation. We are in such a similar pattern where we had the big sell-off, and then we had no FOMOC, and then we go up. So it'll be interesting for sure to see what happens, but that is my anticipation for the next couple weeks here, is that we put in the low. We're going to see a bounce next week. We're going to do some chopping, some consolidation, and then we're going to move up, and we're going to eventually, probably by November, be up here in the 4,000s to 4,100s. Looking at Apple, Apple really doesn't look as weak as I would say SPY looked today. It actually looks pretty strong, and it looks like it's put in really big support right here. So we had the nice sell-off. We actually have a really nice clear channel here too, which I really like. I don't know why this happens on TradingView sometimes, but my lines are they just like phantom move sometimes, and they're just like just a stitch off from where I drew them, and I don't really know why it does that. But so we have our nice blue downward channel here. It's hard for me, if I was somebody that's looking to go long on calls, I would not do that until we break out of this blue channel downward. But you're at a spot here where I don't see downside right now. I see consolidation. Really consolidation, I would say, from 157.3 down here to this 150 range. So this 149.2 has been a big bounce area. You can see we put a big wick down here, we bounced. This is where we put the actual bottom of the candle at 149.1. We wicked through it, bounced up today. So this is a big area. We did close below the 50% retracement though. So let's take a look at the weekly. Kind of an interesting candle on the weekly. It's a massive, technically it's a gravestone doji, because we have the bottom wick there. It's not actually a hammer candle. I would be looking for a bounce up, but if you can see back here where we had the sell-off from March to June, we actually put in a similar candle. It didn't have quite as long a wick, obviously, as here. We put one in kind of here, here. And you can see on a downward, when you have a gravestone doji, it does not mean we're going to bounce. If it would have been a dragonfly like this, I would expect a bounce, which we did bounce this week, but this candle dropped us because of CPI. So this was bouncing up actually to do the bounce there. So we're going to look for 149.3 to hold as support next week. That's going to be the key support to watch. If we break below that and continue to close below that support, because that's where the daily was bouncing off of, then we can suspect, and even last week you can see we were bouncing off that, and that's where we wicked. We can suspect further downside. Key resistance is going to be right here at 155.8, and then we have our actual channel at 158.2, and all the way down here at 142.8. I don't think we're going to break down this low, personally, but same thing, I would not touch calls until we break out of this channel here. It's hard for me to justify puts right here on Apple just because of the setup. Like, yeah, we could see a sell off to 142, 143 area, but I would like to see us up here first and like reject and close up here and see a rejection of this channel, and then I would be looking at puts down here. But for me, the risk reward is not there for puts on Apple. Taking a look at Tesla, so this was probably the best play all week that I called out. I called out on Wednesday right here that since we had rejected and we had closed below the daily 8 EMA, that we should suspect downside. And sure enough, this thing has sold off about 13% in 3 days. I did take this position yesterday. I opened a 15, I think it was, DTE in the morning, and I had sold it by afternoon for like 60%. At some point today, it hit about 100%. Obviously, I should have held that, but I like taking profits. So biggest thing to take away from this is we finally broke this bull channel. So this is crazy that actually Tesla was still trading in this bull channel, because this is the bull channel that SPY and futures and Apple and everybody else has broken. Tesla was the only one still holding on. So despite what the market's going to do, I think Tesla is about to be in for a pretty big correction. Really looking overall at Tesla, it's kind of like Apple. I mean, it really hasn't seen the big correction, I would say, that we have seen on the other stocks and stuff like that. Like looking at Apple, zoom out and stuff. I guess it's kind of in a similar position to Apple. It spent most of the time over the 50% mark. If you kind of look, be about right here. So, but we have this nice inverse head and shoulders pattern forming here. And you can see that we had a ton of consolidation down here. So my target for this pattern, if it continues to play out, is going to be right about here, 222 to about 237 would be the aggressive target, soft target of about 250. I suspect us to be there based on this trend with basically probably by end of October. Maybe a little earlier depending on how aggressive the sell-off gets. So if you're going to play this, I would play it with at least a 30 DTE. So the biggest takeaway, like I said, is we broke support. We closed below the 8, the 20, the 50, 100, and the 200 EMA, and we broke a key support. Now, keep in mind, we have had 4 now red days, 3 of those massive red days, 2 of them over 4%, one of them almost 3%. So Tesla's due for a bounce. I mean, obviously here we had some crazy sell-offs, 8, 9, stuff like that. But this was a different time, obviously. This is the, let's see, where's the June drop? So this is June for CPI drop. You see we had kind of the same ideas, -7, a big bounce, and then we kind of dropped. So I would wait for a bounce on Tesla before I picked up another put. I was thinking about Tesla puts end of day today, but I wanted to wait for a bounce. Mostly because I think SPY is going to bounce on Monday. And I think if a SPY bounce is big enough on Monday, that Tesla is also going to bounce. Now, keep in mind, Tesla and SPY do not have to trade the same. So, SPY can be green and Tesla could have a red day. As you can see back here, there was a lot of days, and even recently, Tesla has had plenty of green days while SPY has had red days. So, just keep that in mind. But my anticipation is we're going to at least bounce off 270 right here and consolidate before the move down. But if we see a bounce up on Monday, and especially if you kind of reject 283, maybe if we get back up to 292, I'd be looking for like a 30 DTE put. Maybe 14 if you want to be super aggressive on Tesla. I think that would be a really solid play. I really do think we're going to see a retest down here to play this pattern out. Looking at the Tesla weekly, this kind of gives me more confirmation bias too. We broke this key weekly support right here. We closed below the 8, 20, and 50 EMA. Naturally, the next support, which we did bounce off almost right here, is going to be at 272.2. So I'd like to see that broken, and then we're going to look for first soft supports 258, and then more aggressive target is at 240 to 222 range. I really do think we're going to get down here. You can see kind of we're kind of in an area about right here. We had that little move, and then we had a huge week down. This was a -9%. And you can see the next week was just a big doji week, and then it did the big move down. So that's kind of the pattern I'm looking for. I think there's going to be a bounce this week, at least on Monday, and then we'll kind of continue the drill. So like I said, I like Tesla puts here. I still think it's a great play. I think regardless of what the market's going to do, Tesla's going to see a move down. The VIX. So I'm probably going to stop TAing the VIX. I'm going to probably stop talking about the VIX as much as I have been, just because, I mean, really, it just is. I have not had a trade based off of the VIX since probably May back here in this area. Ever since this June CPI right here, where we started this huge sell-off, and especially in July, the June FOMOC, I mean, right here, I have just not understood the VIX. It is not really correlating with the markets. So, like, look at today. The VIX opened around, I want to say we were down here. Let's see, actually, let me tell you where. So it opened at 27.7, which is about right here. And it went as low as 27.6. So pretty much where it opened, it actually started going up for there. So to open the market almost -1.5%, but to have the VIX open pretty much flat doesn't make a lot of sense. I mean, we closed at 27.34 and we barely opened $0.3, but the market opened -1.5%. That doesn't make any sense. Why is the VIX going to open at nothing, but then the market's going to open deep red? It doesn't make sense. Same thing here. We had this huge doji, and then with another big red day on FOMOC day. So we had a huge movement on FOMOC day, but in a huge red day, -2%, but the VIX almost closed red? How does that make sense? None of this makes sense on the VIX. So I'm going to pretty much stop watching it. Key thing is that we put a huge high, and we put this was the biggest high, I'm sorry, since June 17th. Key thing I would say to take away, and this also, interesting enough, this is June 16th, which was the bottom of the market, was a high of 34.82. Today we hit 32.31. It's pretty much once we break this trend right here at 32.2, the bottom's in. You can see we spend time here, and we might have one huge wick, but once we pretty much put the big wick candle in, the market drops. Look here, put the big wick in, we see a drop. Big wick in, dropped. You know, wicks, all these wicks. So I think this even further agrees with me, my theory that Monday is going to be a big green day, and then we might see a small trace up here, and then we're going to probably see the sell-off on the VIX, is my anticipation. Bitcoin. Bitcoin's not holding up too bad, to be completely honest. So I mentioned earlier in this week that Bitcoin had closed below 18.8, which is the first time since 2020, which is ironic because guess what week broke this week? It was that weekly support from 2020, COVID. So honestly, the VIX or the Bitcoin should have been our key that we were going to see further downside. And honestly, I wish, looking back now, I would have recognized that and taken the longer put play, which I did have one on Thursday, but I closed it and let it ride. We did see a small breakdown here, as you can see, down to this 18.5 level, but we've double bottomed here, and we've even have some supporting wick right here. So we're still trending below the daily EMA. I would like to see Bitcoin close over that this weekend at some point, and I definitely would not like to see it break below 18.7K again. And that would even further confirm for me that we're going to see upside. Remember, this line right here is the almost a year long. In 2 months it'll be a year long, so 10-month long resistance line from the bear market for crypto. So if we see this broken, which obviously we could chop right here all the way until October and still not break it, that'll be a big bull sign to go. If we break this, I'll be looking to go long on some calls for SPY. So key support is going to be right here at 18.7, and key resistance will be at 20.2K. I had a pretty good week trading this week. Let me get to my P&L for you guys. So I don't usually cover it in my videos, but since it's the weekly and it's longer, I have time to do it. Day trading wise, my win rate was 85.8%. My average total percent gains per trade was 11.01%. And I made 3,077 total from day trading this week. Swing trading, which is unusual for me, my win rate was 100%, and I made $287. I played pretty small. The whole Discord this week had a great week. Ton of green, ton of great emoji responses for the poll, which I like to see. I hope you guys had a good week, and I will see you guys on Monday. Thanks for tuning into this video. Hope you guys enjoyed it. If you like what you saw, go ahead and hit the like and subscribe button to stay updated. I am providing my Discord link right here. That's a lifetime link. If it doesn't work, go ahead and send me a message and I will get you a new link. I do have a pre-market update I do every day where I update with supports and resistances and different scenarios that might play out through the day. I also do a live commentary throughout the day with updates and changes, and I do push out buy and sell alerts on SPY and other tickers that I'm trading at the time. Currently, membership is $20 per month or $228 per year. You can follow me on YouTube, Twitter, Instagram, or TikTok under SPY Optionaire, or Reddit under Daddy Dirch.